Peace and blessings, brothers and sisters. It's yours truly, Amar Mari. Thank you so much for tuning in to Wealth Building Strategies Mondays, where your financial wellness is of our concern. I am the CEO of Synergetic Network Group LLC. We are the community liaison for entrepreneurs and consumers, and our attitude of servitude here. We're here to help market your business, and we believe in helping our people to establish generational, transcending business-based wealth. What do I mean by transcending? Meaning that your money is so big to the point where you're able to help the community because you have so much cash flow coming in. We're very, very, very fortunate to have, I like to say, the queens of finance on the platform on the day. These are my good sisters. We labored together. We were all part of the same networking group, and we're still part of the same family here. And I met these queens at these various networking events, and I found out what they did, and I believe they are a perfect match for what we are doing. They will help us to level up in the area of our financial literacy. So, who we have in the corner, and before the bell goes ding, get ready to pass this powerful information, man. We have Queen Zipporah. How you doing, Queen?
I'm doing well. How are you?
I'm doing well. Thank you for asking. So tell us about yourself and your businesses.
Okay. I'm actually a real estate agent in South Florida area. I cover mostly Broward County and the upper part of or my, and then I also work as a restoration. So I help people to fix their credit as well as become financially literate and get on a sound financial track to get out of debt. So those are the things that I do.
All right, then we have Queen Shanda in the house. Queen, how you doing this evening?
I'm great. I can't complain at all.
Wonderful, wonderful. So tell us about yourself. Hey, Delta's out there. You know, she do it. You know, she
Absolutely. Ooh, to my sorors.
all right there now.
Yeah, so good evening. My name is Shanda Porter. I am a licensed mortgage lender, which means that Zipporah helps you find the house. I help you find the money to buy the house. So that's how this partnership works. Um, and, as Amari stated, I am a member of Delta Sigma Theta Sorority Incorporated. And I also teach the Dave Ramsey Financial Peace courses at my church. So I'm very, very, very active and interested in creating generational wealth for our people.
Wonderful. We thank you so much for that presentation. Ladies and gentlemen, you are in for a treat. If you would be so kind at this time to share and invite, what we want to do, we want to send a shout out to our prayers. How you doing, Kimberly, Renee? I was gonna say your whole name. I'm not gonna do you like that. Hey, we send our love, Queen. Thank you so much for tuning in. Sending love to my Queen, Amani Mar. Thank you so much for tuning in. Who is the executive director of Synergetic Network Group LLC? Now, you know I had to give her a shine. Now, I don't want to get in trouble. You know what I'm saying? Everybody praise me.
That's right. That's right.
I want, I want to stay out of the hot kitchen. You know what I mean? But
Right.
we thank you so much for tuning in.
Exactly.
And again, if you'd be so kind to share and invite again, this is not for fame. This is about transforming lives. All right. So as you begin to do that, we're going to call Queen Zipporah, one of the queen of finances, up to the mic. What you got for us this evening, Queen?
Okay, great. So I'm here to share about the home buying process from the real estate agent's perspective, and I'm going to partner, obviously, when it comes to the financial part, with Shonda, so she can go into more detail with that. Um, Basically, the reason that I got into real estate was, I mean, I've owned a home before, and I've also sold a home before. This was in another state, so and it was years ago. So when I moved here, I wanted to know about the whole process, and I had this real estate agent. He told me to basically send all my information over. I sent my credit report, I sent my W-2s. I sent all my information over to this guy's email and never got a response. I mean, from anybody. I basically sent my whole entire life over there. So that inspired me to say, okay, I'm going to go find out about this myself. And then I obviously began to find out about myself more and the importance of generational wealth. And I also found out that a lot of our people don't quite understand fully the process of buying a home. So I wanted to make sure that as a real estate agent, that I educated my clients on the entire process so that they would be loaded with information and understand what they're getting into, because this is definitely one of the largest purchases of your life. And it's a lot more details entailed into it than most people understand. So my first recommendation is, if you're thinking of buying a home, you want to go ahead and start getting prepared to buy a home while doing research at the same time. So that could go into details of getting your credit together. If your credit score is shaky, or we'll just say under 580, I don't want to get too much into Shanda's part, but making sure that you have a solid credit score, as well as making sure that you're saving money so that you can put money down on a home. You also want to be doing your research as far as what the housing market is like. You know, if you're looking like, okay, I want something for $250,000 or $300,000 house in South Florida, go ahead and start doing some early research as far as just browsing realtor.com, things like that, so you can see what $250,000 or $300,000 will actually get you. And then, of course, like, you want to save anywhere between, I always tell clients to have, ideally, you want to have 20%, but I always say have 8 to 10% down, for closing costs, as well as down payment and the other fees that are incorporated in the process. So that's one of the things that I tell people to start doing right away, that they can, be proactive with. And then the next step, obviously, is to get ready for the financing. And from here, I'm going to pass that to Shanda. This is her arena.
Okay, so Shanda, I'm getting ready to take you off of mute. Okay, Queen, your mic is hot.
Okay, so just as Zipporah stated, so once you have started your research process and you think you are ready to embark upon, now making the step to proceed, the first person you want to visit is a lender. You do not want to go to a realtor not knowing how much you qualify for and basically what your purchase range is, because that's basically what they're going to do. You go to them and tell them how much you qualify for with your letter and your information from your lender. If you go without, then it's basically like shooting fish in the barrel. You're basically saying to them, oh yeah, I've been researching and I want to purchase, 350. I've been seeing houses at 350 price point. But then they start taking you out and looking at places for that price point. Then what happens is, your realtor, if they're experienced and knowledgeable, they're going to ask you first for your information from your lender. Not any realtors that are experienced are going to take you out without that information first. But if you happen to, come across a realtor that's not experienced, they will take you out and go on your word of, oh, you want to look at 350,000 or $400,000 homes. And then when it comes time for the financing and you come back to me or to a lender and we say you're qualified for 250, well, that's a big difference. And that's a big difference as far as what you're going to get in comparison to neighborhoods, in comparison to the conditions of the homes. It's just going to be different. And then you're going to be, heartbroken because you were out there looking at, 350,000 and $400,000 homes, when in actuality you only qualify for 250. And now your search becomes much harder because it's not anything compared to what you thought you were going to get. So definitely the financing portion is where you want to start first. And one of the first things we're going to do is, yes, we are going to pull your credit, and it will be a hard pull, which means that it's going to count as an inquiry on your credit report. Um, and when we do that, we're looking at all three credit bureaus. So there are three credit bureaus: Experian, Equifax, and TransUnion. We are going to pull from each of them. And then from those three scores that we receive, we're going to qualify you based on whatever score falls in the middle. So it can be the Experian score or the Equifax score, whichever score falls in the middle. It doesn't matter which one. That is the score we're going to use. And then from there, that's when we start the process, and we're going to ask you for your income information, your asset information, your employment information. We're going to ask you for your income history, your employment history, your residential history. So there's going to be a lot that we're going to ask for. And the analogy I like to give is, if your cousin Fred, for example, came to you and said, hey, John, I want to borrow $50. You're going to start asking questions immediately. What you need it for? When am I going to get it back? How long is it going to take you to give it back to me? Those are the kind of questions you're going to ask. So if you come to a complete stranger, i.e., the bank, and ask for $250,000, what do you think the questions are going to be that we're going to ask you? We're going to ask you pretty much everything under the sun. We're going to go under every rock because, again, we don't know you. So the only thing we can't go by is your financial history and what's on paper and what we see. So that is the very first step that you're going to do. So, Zipporah, I'll toss it back to you for the next.
Okay, I'm getting ready to unmute your mic now, Queen Zipporah, and your mic is hot.
Okay, perfect. Um, yeah, thank you so much, Shanda, and I'm glad that you mentioned the point about the pre-qualification first, because I personally, that's the first thing that I ask for. If I have someone come to me, because I want to know how ready they are and where they're at. So even if you don't have your pre-qualification, we can still get you ready. But before I take clients out to see properties, I need to know what your pre-qualification amount is. Like she said, it's like, going into taking a kid into a candy store and saying, hey, look at all this stuff, but really we can't afford it. So that's definitely the first step to get pre-qualified to, and even before that, like I said, go ahead and getting your credit together. And the lender will also let you know if you're not ready at that time, what you need to do and the steps you need to take to get ready. So for the purposes of the show, let's just assume everything went okay and you had everything in line and the person was pre-qualified for a set amount. So after that is when you want to start looking for your real estate agent if you don't have one that you're working with or know already. And the job of the real estate agent is to help you to navigate throughout the entire home buying process. So even say, for instance, if you don't know any lenders, we have resources of all of the people that you're going to need throughout the process. So I could refer you to a lender. You got Shanda right here. With Shanda and I work closely together. So you want to find a good real estate agent, one that you trust. And sorry, guys. Like I said, our job is to navigate throughout the process. So now you've got your pre-qualification and we're ready to go search for homes. Usually what I do is I set people up on a listing alert based on what's actually available on the market and their desired areas that they would like to live in. So hopefully you've done your research on that. You know what school you want your children to go to. You know how close or far you want to be from work. And so we've gotten all that taken care of. And now we're out and we're searching for properties. Most people think that, okay, I like this one, that's it, we're gonna get it, right? Like that's it. It's not that simple. So if you find a property that you are interested in, that you do like, that you are within the qualified amount for, the next step is to actually place an offer on the property. So we have to go through to the owner and the owner's agent. And I always say this, if you like it, no other people like it. So at that point, people ask, okay, well, what are we coming in at? Is if the house is 250,000, do we have to come in at 250,000, or are we going to have to go over that type of thing? It just varies. You want to put a good, strong offer in so that your offer actually gets accepted. You don't want to lowball it by like $10,000, $15,000 because that's probably going to get knocked out right away, won't even get considered. So you want to come in with a strong, solid offer within what you can afford. Um, there's other fees as well to be concerned about. Say, for instance, HOA fees. Um, if you're moving into a homeowners association, you'll need to include that on top of whatever your mortgage amount will be. There's also taxes that will have to be paid. You won't have to pay for the time that you weren't living there, but from the time that you began to live there and on, you have to pay. There's insurance, mortgage insurance. I'm sorry, I can't hear you, bro. Are you speaking? Oh, okay, I'm sorry. um, there's all different types of fees. Okay, sorry. So we've placed the offer for sakes of the show. Let's just say the offer was accepted. This is when it gets a little real. The whole process is real, but this is when it gets a little bit of buyer's anxiety, because it's like, okay, this is a big purchase for you. You're putting a lot of money out there, a big step um, in your life. So the next step is the offer's been accepted. Immediately, we want to try to get this closed within 30 days or less. But typically, you can expect anywhere from 30 to 45 days to close. So the next step would be to get a home inspection of the property. So once again, if you don't know any inspectors, I know lots of inspectors that I work with, but that's also another fee, an additional fee that you will have to pay for that home inspection that you don't get back. So they're going to inspect the home from top to bottom, from roof to the foundation, and to make sure that there's not any serious issues with the home that would stop you from wanting to buy it. Um, let's just say that the inspection was perfect. We always hope for that, but it never really works out like that. But let's just say it was perfect. So now we've got the inspection taken care of, and you're going to be back in the lender's hands again. Because remember, once you got your lender is with you throughout the entire process. The real estate agent is with you throughout the entire process. And some of the other service providers that come in, they're there for a time. But there's at least about 7 hands in your transaction, 7 different companies and businesses working to get you and your new home. So now the inspection has gone through, and I have kicked you back over to Shanda.
All right, Shanda, get ready to unmute your mic.
All righty.
Your mic is.
Okay. So, as Zipporah stated, so I'll pick up from the point of your contract has been accepted. So once your contract is accepted, like she said, that's when the rubber meets the road. That is basically when your clock begins. So if I or your lender is asking you for documents, that means we needed them last week. That's the urgency of it, because in your contract, that is a legal binding contract. So in that document, there are timelines that we have to meet as a lender. There are timelines for your inspection period. There are timelines for your appraisal, and there are timelines for your approval. So as an overall scheme of things, we are really basically have the clock running, and we're hitting, we're cooking with gas. So the expectation of the buyer, which is you, is to basically comply with any and everything that we're asking you for. Obviously, we'll do our job and our due diligence to explain what we need, but explaining it means we still need it. There's no negotiating saying, well, why do you need this or why do you need that? We need it. Okay. That's just, I'm going to explain it to you, but that doesn't mean that once I explain it to you, you can't give it to us. So we have to have that information, whatever it is that we ask for. Now, generally speaking, because I tend to be very thorough, I will ask for, I would say, 80% of the documentation up front, simply because I want the process to go as smoothly as possible for you, the buyer. I understand what it means to be a nervous buyer, to have buyer's remorse, or, just, oh my goodness, what am I doing? I'm embarking upon the biggest thing ever, that I think I'm going to do. So I know what that feels like. So I try my best, to ease that part of the process for you as much as possible. So I ask for most of that stuff up front. So if it makes you feel like, oh my gosh, she's asking for XYZ, or maybe you say, my sister went through this process, or my cousin went through this process, and they didn't have to go through this. But at the same time, what I like to explain to people is, if I ask for the information up front, that means your approval process is going to go very, very smoothly and very quickly, which means it's going to be less stress for you on your end. So we've kind of done everything up front. And then once we receive everything and we submit the file to the underwriter, we will get what is called a conditional approval. Now, to toot my own horn, toot toot, the most amount of conditions that I've received coming out of approval is four. So to say the least, that is phenomenal, because that means it's just simple, basic. Oh, we just need to verify this, or we just need to verify that. It's nothing hardcore or extensive. And if it is, if it's a complicated loan, I've had like six on a complicated file. But again, if it's a easy, cut and dry, easy file, the most I've gotten is four. So you want to have a process like that, where I've had clients to say, oh, okay, so we're ready to sign. Okay, hold on. Let me let my employer know. Let me get this in order. Let me get that in order. Okay, I didn't think it was going to go this smoothly. So you want to have that experience. As much as you can. So that's why you want to get the documentation to us as quickly as possible. Also, I want to touch upon when Zipporah was talking about the home inspection. So there's a home inspection and there's a home appraisal. The home inspection is for you, the home buyer. That is basically what's going to assist you on giving you credits and discounts on your homeowner's insurance. And then also it's going to tell you the conditions of the home, the structure, the roof, the plumbing, the electrical, the AC. It's going to give you that report card basically on the condition of the home. Now, if it comes back with some imperfections on there, then that's where you and Zipporah will work together to renegotiate your price with the seller, possibly. If the seller, and most of the time, the seller knows, because they also have a realtor that they're working with on their side that's giving them, basically their experience, and saying, okay, well, this may come back on the inspection. So the inspection is for you and for your knowledge, as far as what is the condition of the product that you're purchasing. The home appraisal is for the bank. It clearly is simply for the bank. It is for us as the lender to basically verify that this piece of collateral, this property, is worth what it says it is, and that we can, basically put a lien against it, which is your mortgage. So your mortgage is basically a lien against the property. Your property is the collateral. So if the purchase price is 250,000, your appraisal needs to come in at least $250,000 or more. If it comes in less, then again, that's another tool that the realtor can use, Zipporah can use, to go back to the selling realtor, to the listing agent, to begin negotiations on that. If it's a big difference, sometimes the seller will say okay and admit it and say, okay, I'll come down to this. If it's a small difference, usually what happens is that there's some type of negotiation and agreement where the two parties meet in the middle. So let's say, for example, if you wanted, the purchase price is 250, but the property came in at 245. Um, so then basically you're going to put in an additional $2,500, and the seller is going to lose $2,500. So your price now is going to be 250,000, $2,500. Sorry, I can't get my words out right. But 250,000, 2,000 and 250. Oh, I can't get my words. Anyway, you know what I'm saying. So you'll get those. You'll pay the additional $2,500, and the seller will come down $2,500. They'll lose money basically. So that's how the appraisal goes. And then again, once that is done and once that is accepted, and then at that point everyone can breathe. Like I said, the file can, the underwriter will continue underwriting the file. They're going to underwrite the appraisal, make sure everything is correct. And then once that's done, and then we'll get a what's called a final approval. The final approval is a final approval, but that doesn't mean you can go out and buy furniture just yet. That basically just means we are approved. The underwriter has signed off on the conditions that you provided, which are the documents to basically meet her conditions on the approval. And then from there, the file it goes through our QC audit, which is basically our quality for compliance. It goes through that audit to make sure that everybody in the file, so everyone who has touched the file, from me, the originator, to the realtors, to the title company, to the processors, to the underwriters, that basically none of us are doing anything, under par. So that will, and that the file, everything has been reviewed and all T's are crossed and all I's are dotted. Once that is complete, then the file goes over to our closing team. And then the closing team is the team that basically prepares the documents. They don't approve a loan. They don't, deny a loan. They basically prepare the closing documents, which is the, large, thick package that you're going to sign at closing. That's when your verifications, your insurance will be solidified, as well as your the last few verifications that we have to do. So we'll do a verbal verification of employment at that time. And we'll also, re-verify with your assets to make sure you have the cash to close. All of that is really done in the compliance portion again. But those things are important. I've had files where people have lost a job from when they started to the time the file is ready to close. So that obviously causes a problem because if you don't have a job, you can't get a loan. So we've had that issue. Or they will do again a soft pull on your credit. It won't be a hard pull, but they'll do a soft pull on your credit, which is basically checking for inquiries, and basically checking to see if you've requested any additional debt, if you've received any additional debt. So again, during the loan process, once your contract has been accepted, to the time you sign your documents, actually beyond, I like to tell my clients, even after you close for another 15 to 30 days, hold tight on going shopping, because what happens is your loan goes through a post-closing audit. And again, they check for things such as um, if you received any new credit, if you've opened up any new credit cards, if you went out and bought a car, if you've done any of those things, because what that says to them is, oh, now they bought the house, now they're shopping. So now they're shopping for furniture to put on credit, because most people use up their cash on hand for the closing transaction. So a lot of people after closing, you pretty much have to replenish your cash accounts. And the only thing you really have left for you at that time is credit. And um, so many people will go out and they'll, buy the TVs, buy the furniture, buy a new car to go with the new house. And again, if you do that anytime before closing or within 15 to 30 days after closing, and it comes up in the post closing audit, it can then cause a big problem with your loan. And it can cause a problem as far as, your debt to income ratios, which is one of the factors that we use to qualify you. So if you go out and purchase a new car for, a $450 payment, that will now take your ratios unless, you make enough income. But if you're borderline when we qualified you in the beginning, now that is going to tip you over. In Houston, we have a problem. So to avoid any of that, I tell everyone, from the time you're contracted, or actually from the time that I start working with you and I pulled your credit to the time that you say, okay, I found a house, I have a contract, we're going to close. From that time forward is when you want to freeze any unnecessary financial transactions. So if it's not your rent, your food, your clothing, your shelter, or current car note, if you have one, then don't do it. Don't do it at all. So that's what I advise my clients, because at that point in time, otherwise you'll just be writing a lot of letters of explanations, and depending on the strength of your file, it can cause you to go into a denial at that point. So you want to beware of any of those type of financial dealings, and using your funds, or moving funds around. You want to avoid all of that. So that's the process from receiving the contract to closing. So I'll now toss it back over to Zipporah.
Okay, getting ready to make your mic hot, support.
Okay, thank
Your
you.
mic is hot. You're welcome.
Thank you for that explanation, and I'm glad you brought the appraisal up because that was my next my next cue. But yeah, so you and that I did want to mention about that. That's another fee. That's another fee that can be expected as part of the closing cost as your appraisal. Like you said, after your inspection, the appraisal comes out, and they want to make sure that the house is actually valued at what it's going for, or what you're paying for it, or what they're going to lend on it. Another partner that works with us to get the transaction closed would be the title company. And actually, they come on the scene once the contract is accepted as well. And what they're doing behind the scenes is they are pulling title searches to make sure that you procure a clean title, well, that doesn't have any liens on it, due to a variety of different reasons. It could be tax liens, it could be something that's in probate. It could be illegal build outs, which, things like that, where there haven't been permits pulled and paid for. So they want to make sure that at closing, you actually get a title that is yours. Um, and they're also the ones who give us the clear to close. After all the other process has been done, they're the ones the last ones of the deal, who actually check everything, make sure everything is ready to go, and we get the clear to close from them. That's also another fee. That's another, third party that will be paid and should be included in the closing costs. Um, After that, once we receive the clear to close, we're pretty much good to go. And um, I'm glad you also said about opening the credit and, buying cars and things like that. I also advise my clients not to do that at the buyer's consultation. We're all teaming up to get this closed for you so that you can get in your new home. So that's a big one. But once the title company comes in, gives us the clear to close, we all come around the table to sign that thick packet that Shanda and them have prepared for you. And you will be signing a lot of papers, but it's usually like a bittersweet, moment. People have had a lot of ups and downs with the emotions up throughout the process, because they really didn't understand that it was this entailed. That's why I like to sit down and educate my clients, so that they're not like, oh, what's this, who's that, why is that happening, oh, I didn't know I was going to have to take another $400 out. So they're from the beginning to the end, and they actually fully understand what's going on and what they're purchasing. We don't want any, oh man, I wish I hadn't got that, or nobody explained that to me. So that's the whole reason for all of this. But once closing day comes around, you sign those paperworks, you get your keys in hand, and you can make your home yours. But like Shonda said, don't go get happy and start buying a bunch of furniture, because they're going to do another pull. So that is what it is that I do, as a real estate agent. And I team up with partners like Shanda, and home inspectors and appraisers and title companies. And we all working to get you in your new home within that allotted time frame, and make sure that you're getting, a good home for the right price. And yeah, that's what we do. Did I leave anything out, guys?
You did an absolute phenomenal job there, Queens. What we're going to do is now, family, we're going to have what I like to call an open mic. And no, you're not going to start doing poetry. a question and answer session. So if you would be so kind, prepare yourselves for the questions that we have coming from our audience out there. I want to definitely
Okay.
acknowledge my queen. Thank you so much for the comments. Also, Queen Kimberly, thank you so much. Say said interesting. So you definitely have people out there who's hanging in there with you. All right. So the question and answer session is going to begin with this open mic session. I'm keeping both of your mics hot. So either or one of you can answer it expeditiously. So we're going to go into these questions that I have written down here. That's been posted in my own personal ones, inclusive with that. My first question is, in fact, it's actually a two-part question. What's a good credit score to have, and what's the minimum score?
That's always the magic question.
Yeah.
Okay, so the minimum score that you really want to aim for is a 620. But you don't want to just have a 620 because, again, during the course of the transaction, if something happens that can bump your score down, then, again, Houston will have a problem. So you want to aim for, I would say, 660, 680 is a good floor score to have, and then work your way up from there. But for the purposes of the show and to keep everything brief, you want to have at least a 620. And like I said, if you want to aim high, aim for like a 660 or better.
Okay, now with that being said, is that in all three of your
No,
scores?
right. No, so that you want that to be your middle score. So again, remember, like I said in the beginning, your middle score is whichever score falls in the middle. So if one score is a 619 and another score is a um, 6 640 and another score is a 675, we're going to use the 640 to qualify you. So we're going to throw out the 619, we're going to throw out the 675, and it's going to be the 640 score that we're going to use to qualify you. So it's whatever score falls in the middle from whichever bureau, it doesn't matter.
Okay, Queen Zipporah, do you have anything you'd like to add?
Um, yeah, I usually there's a couple different types of loans. I mean, you have your FHA loan, which is the federal loan, and then you have the conventional loans as well as VA loans. So for FHA, I believe it's 580. It's 580, and that's the required credit score to go in with an FHA. And the whole purpose of that, obviously, is to help people gain ownership that uh, have the income, but may not necessarily have the credit score there. But like Shonda said, you don't want to just be right on the margin just in case something happens. 620
Hmm.
starts the conventional.
And then also you want to also know that if you are in the 500 range, if you are down in the 580 range, um, you are going to be required to have more to put down. So instead of the 3.5%, it'll be at least 5%. So the lower your score, basically, the more assets you'll need to have because you're going to have to put down a higher down payment. And in some instances, you want the assets to be there to strengthen your file. So it's not impossible. It's not that it cannot be done. But again, if you can avoid that range, that would be beneficial.
Excellent. Thank you so much for answering those questions. Being that Zipporah, you brought up the FHA, the conventional, you queens are on fire because that's exactly what we had written down. So you queens are on point. You are on point. Also, I wanted to include in that my additional question is the equity loan. What about the equity loan piece?
Okay. So the equity loan is a second mortgage. Um, you basically would have a first mortgage. And this happens a lot when people are looking to refinance. In fact, I had a call like this today. So, she already has her home and has her first mortgage. but she's looking at possibly doing a home equity line of credit. And the way that works is you're basically borrowing against the equity of your property, um, kind of on credit card terms. So it's not on the same terms as your first mortgage. It's on the terms of more like a revolving credit card. So you have a certain limit that you have available to you. And, basically as you use it is how you pay it. Um, there are positives to that type of loan. Obviously, if your first mortgage has a very low interest rate, but you want to use your equity to maybe do some home improvements or do some other things, put a child through college, whatever that may be, you want to access the equity in your home. That could be a viable option to do it. However, like I try to explain to people, understand that that is a second mortgage on your property, which means it's going into the second lien position on your title, which means it is now a riskier loan for the bank. And as a result, your interest rate is going to be higher. And your first loan has to basically agree to have a second loan underneath them. So, there are a lot of complexes with having the line of credit. Again, it's not something that's impossible. They're starting to come back now more, become a little bit more popular now because obviously interest rates are rising. So a lot of people don't want to refinance their first mortgage, because obviously that means they'll have a higher interest rate. So they're starting to come back again. There was a period in time after the financial crisis, in 07, 08, there was a time where basically the home equity lines of credit went away completely. So now they're starting to come back a little more because again, the interest rates on a primary mortgage are starting to increase, and so people don't want to change that loan because, like I said, the line of credit becomes a second separate loan, and your first loan is not bothered. So now you will have two mortgage payments instead of one.
Mm-hmm.
Excellent. So with that being said, out of those three, in your professional opinion, which one would be the best of those loans?
Um, the home equity line of credit is to me, I would think that would be the last option. Like I said, your first mortgage would have to have a very, very super low rate in order to say, okay, it makes sense to go with a line of credit, because the line of credit interest rates are going to be upwards in the sevens, the eights, sometimes tens. And depending on those terms, they can also be the flexible or adjustable rate type mortgages. Like I said, the equity lines of credit do function similarly to credit cards. So the interest rates and things like that can adjust according to the market. So I always advise, like I said, depending on the scenario, and everyone's situation is different. So I like to consult with the clients and really, lay everything out on paper. But generally speaking, it is probably always best to have just one mortgage and have a first mortgage, because once you start adding additional mortgages, it comes with additional risks, which means the interest rates are going to be higher.
All right, thank you so much. Hey, family, technical difficulties. Those of you who can still hear them, just give some thumbs up if you can still hear them. Okay, because Queens right now, unfortunately, you dropped. But people can, my queen says she can still hear you, but I want to make sure everybody else that is their case. So if you can still hear Sister Zipporah and Shanda, if you would please just give a thumbs up or actually type it in, yes. That'll be great. I don't want them to be talking and wasting their breath if you can't hear them. Okay, Queens, you're in the house. All right. Well, that completes right now our question and answer session, family, because they do this for a living. Okay, so if you have any further questions for them, it'll be great if you contact them personally. So starting with Queen Zipporah, if you would tell them how they can get in touch with you, and thereafter, Queen Shanda, if you would tell them the same.
Okay, I'm all over social media, so I'm on Facebook and Instagram as Zban. It has all my contact information there. There's a link where you can get directly to my website as well as for the credit repair page. And it also has a link when I do live home buying workshops so that you can stay up to date on that. So it's Z Banyay Realtor, and I'll make sure that I post it in the comment for everybody so that.
All right, wonderful. Shonda?
Okay. I too am on social media, and I can be reached at the Mortgage Mogul SP. So that's THE Mortgage MORTGAGE Mogul MOGUL S as in Sam, P as in Peter. So the Mortgage Mogul SP on Facebook, Instagram, and Twitter. Um, and then also again, all of my contact information is there. There's also a live link there for a homebuyer workshop class that I'm having next Tuesday at the Starbucks in Miami Gardens on 27th Avenue. Um, and that information is there as well. And that's where I go kind of detailed into the different loan types and the different loan programs and things like that. So if you're definitely interested in thinking that this might be what you want to do within the next, have a goal for yourself within the next 6 months or so, definitely come on out to the home buyer workshop class, and I will be glad to assist you.
Excellent. Okay, Queens, at this time, do either one of you have any closing remarks, last minute thoughts?
I just wanted to say that homeownership is important generation because it allows us to leave our something that they can do whatever with, whether they choose to just keep it in the family or if they want to sell it and start a business with it. It's something that I think our people should definitely be made aware of the process and how we can create that generational wealth to leave our children assets and not liabilities.
Wonderful. Queen Shonda?
Yes. So I just want to say that, home ownership is definitely something to strive for. Renting gives your money wings. You don't receive any type of tax benefits or credits. When you rent, you're basically just making your landlord richer. So there are benefits to home ownership. It is a serious venture, so it's not something to be done lightly, but it's not impossible. It can be done, and we're here to help you through that process and to walk you and hold your hand and help you accomplish your goal of home ownership.
Wonderful. Well, for my Queen Amani and Mari and we thank you so much, Queens, for coming on. The Queens of Finance, brothers and sisters. Introducing the song. Yes, indeed. So listen, definitely reach out to the Queens. You have a shout out from Kimberly. She said highly recommends Zipporah and Shanda. They are both helping me with my condo since relocating to South Florida. So there you have it, brothers and sisters. That is an organic individual. I assure you that she is not a paid advertisement. I promise you that. Good friend of all of us. So trust and believe. She can definitely be taken at her word about what she's saying. I promise you that. So we thank you all for tuning in again on this evening for Wealth Building Strategy, sponsored by Synergetic Network Group LLC. Remember, we're the community liaison for entrepreneurs and consumers. If you have a business and you would like to highlight your business, feel free to contact myself. I would love to assist you in that endeavor to grow your business and to bring to you organic reaches. This is what we definitely promise you. We will definitely bring organic reaches to you. Hopefully, you all have a blessed evening and enjoy yourself. Be blessed.
All right.
Thank you. Good night.